All right, good morning. I'm still David Savage, and I'm still from Charleston, South Carolina, assuming they allow me to return. All right? Let's talk a little bit about economics. Let's hear a cheer. There's a guy in the White House who got elected promising to impose tariffs. This is the economics panel. The name of this panel is Market Economics, Busting Protectionist Myths since 1776. The moderator for this panel is Mr. Bob Buschman. Those of you that have been here before, you know that Bob is old school, one of the inaugural members of Principles First. He's the co-chair of this year's Agenda Committee, and this is his fifth summit. And Bob, I believe it's your fifth as a presenter, right? Third as a presenter. Bob Buschman serves as the state economist for the state of Georgia, having been appointed by Governor Bryan in 2023. Previously, he was an economist at Georgia State University's Andrew Young School of Policy Studies and interim director of the school's Public Finance Research Cluster. Bob holds degrees in economics from Duke University and finance from Goitsu Business School at Emory University and a master's and doctorate in economics from Georgia State University. Bob, take it away.
Thanks, David. I would only add one thing. I'm here as a private citizen, so any opinions I express here are solely my own. But you're here to hear from my panelists more than me. I'll ask the questions and see what they have to say. We have a lot to cover. So quick introductions first. Veronique de Rugy, to my immediate left, is the George Gibbs Chair in Political Economy and Senior Research Fellow at the Mercatus Center at George Mason University, and a nationally syndicated columnist for Creators Syndicate. She also writes for Reason Magazine, National Review Online, and other outlets, and has testified numerous times in front of Congress on fiscal and economic issues. In 2015, she was named Politico Magazine's Guide to the Top 50 Thinkers, Doers, and Visionaries Transforming American Politics. So welcome, Vero. And we're also happy to welcome Bryan Riley, who is director of the National Taxpayers Union's Free Trade Initiative. You may have seen his trade expertise quoted in publications including the Washington Post, the New York Times, and the Wall Street Journal, or maybe even heard him speak around the country on the benefits of international trade and investment bring to Americans. Bryan has led grassroots campaigns in opposition to special interest efforts to get the government to pick winners and losers in the U.S. economy, and in support of initiatives like the North American Free Trade Agreement. You all know that NAFTA, as it's called, was cleverly renamed by the President in 2020, the United States, Mexico, and Canada Agreement, or YMCA, USMCA. Okay, so to kick off our discussion today, who knows the most beautiful word in the English language, at least according to President? Tariffs, there you go. So for at least the last 9 years, our once again president has talked often about tariffs. Tariffs can apparently cure anything. He likes tax cuts too, of course, but he needs Congress to enact tax cuts. He can bypass Congress to impose tariffs. So tariffs are his hammer, and every economic issue, and even some non-economic ones, is a nail. In his first term, he slapped tariffs on solar panels and washing machines, on steel and aluminum, on our immediate neighbors to the north and south, who are our biggest trading partners, and of course on China. When our trading partners retaliated, the president spent $28 billion of taxpayer money in 2019 and 2020 to compensate farmers for trade losses. This time around, he's giving us reruns of some of these hits. He's also going bigger and broader, and even threatening friendly nations with tariffs to get them to give us land in the Arctic or canals in Central America. His latest order, I believe, is to have the Commerce Department and the U.S. Trade Representative study and develop a full set of reciprocal tariffs for every single trading partner we have. He calls this the Fair and Reciprocal Plan, or FAR Plan. I guess we should just be thankful he didn't stick with the old name, the Fair and Reciprocal Trade Plan. Anyway, he has lots of reasons for imposing or threatening to impose tariffs, a different reason for each day of the week, it seems. So we'll talk about those justifications, then we'll move to what we can expect the administration's tariffs to do to us as consumers and to the nation's economy before finishing up with what trade does for us. First, I'm going to start with a couple of questions, sort of background on the issue of trade and tariffs, and the principles that should guide how we view the issue. A couple of minutes each. Vero, as an economics educator, can you give us a quick history lesson on calls for trade freedom around the time of the nation's founding, particularly the enlightened view of trade we associate with a certain book published in 1776, and also some trade-related complaints America's founding fathers around in declaring our independence the same year?
Yeah, happy to. It's good morning, everyone. It's actually worth saying that the instinct of protectionism is actually a very unfortunate but natural instinct. And the thing about the free trade movement is precisely that it is been fighting a very natural instinct that people have. And free trade has a long and illustrious go at this. The theory that free trade is good for, and even actually favorable for all people, has been honed and polished for and tested for the last 250 years. And of course, the effort, like the most famous effort, was Adam Smith with his inquiry into the nature and cause of the wealth of nation. And it's not surprising, by the way, that part of Smith's case for this was actually a support for what the Americans were doing. And in part, it was directed at supporting American precisely because Smith understood that what the British were doing, were trying to monopolize trade, was neither good for America nor was it for Britain itself. And so, I mean, you showed me, shame on me that I haven't been reading my Declaration of Independence, but you showed me actually where it is in the Declaration of Independence, where they actually really, they talk about the fact that tariffs from the British and their attempts to hinder trade between America and Britain was a big part of why they wanted their independence. Now, that being said, right, I mean, it may surprise you that we have data for 250 years in testing that theory, but it may surprise you because there is a resurgence of belief that actually the reason why America became so rich is precisely because we were protectionist. And it's not that we weren't, but we weren't, actually. It is true that until we got the income tax, right, the main source of revenue that the American government had were tariffs, but they weren't protective tariffs. They were actually meant for raising revenue. And there were periods where they were meant to be protectionist, but that didn't start until 1816, and then it went on until 1830, and the reason why they were removed is precisely because it wasn't good for the country. And then we had the late 19th century, and that too didn't work that great. And economic historians have actually shown, and Doug Irwin in particular, that during these times where they were using tariffs not just to raise revenue, but to actually be protectionist, because you can't do one and you can't do both at the same time. Because if you're protectionist and it's really working in preventing imports from coming in, then you're not raising revenue, which is kind of one of the things that's weird with Trump's rhetoric on this. That during the times where tariffs were indeed protectionist, it was actually the industry that were subjected to the tariffs were really growing not as fast as the others. And there's also something that those who push the narrative that this country was born out of protectionism and made rich by protectionism is they forget that one import that was coming here it was flowing in really, actually, and just in massive amount without any tariffs was immigration. And this country not only became rich precisely because actually tariffs were not protectionist, but also because we had so much immigration.
Thank you. Bryan, you write for and talk trade policy with policymakers, business leaders, and the public as part of your job with NTU. Can you share with our audience the one or two basic points of principle that should lead one to support free trade and oppose efforts to restrict it?
Well, thank you, Bob, and thanks everybody for being here this morning. I've worked on trade policy for a long time, and one of the principles that I hold to was something that my dad taught me when I was very young, too young to really understand, and he talked about the idea of you can look at the world as there being a fixed pie, and we're trying to divide it up, and it's everything you do is win-lose, or a growing pie, and everything you do is win-win, and you try and expand the pie to make people better off. And that's kind of the approach that I bring to trade policy. And when I talk about trade policy and free trade in particular, that phrase means different things to different people. So I'll explain what it means to me specifically, is that when you earn your paychecks, you get to decide how to spend your dollars, you get to decide how to invest and save your dollars. Those decisions are not made by somebody sitting in the basement or the first floor of the Commerce Department or U.S. Trade Representative's office or some congressional office based on who's got the most clout. And I was happy to see that this is one of the principles included in this organization's basic principles at all, that everybody works towards. So a lot of times when people talk about trade policy, to me, it gets really technical and departs from these first principles. I think there's a great opportunity. I appreciate the chance to talk about these first principles with respect to trade policy, because with trade policy, it's really just about your freedom. You know, there's exceptions to everything, and we'll talk about some of those. But really, it comes down to: is it your money? Are you free to decide how to use it, or is somebody trying to dictate those decisions on your behalf? Whether it's the lumber that goes into building your house, your export markets for your soybeans, or whatever the case may be.
Thank you, Bryan. Okay, to the tariff issue specifically, when the president is talking about what the president is talking about when he brings out the tariff hammer, is quite simply a tax. It's a tax paid to the U.S. government by U.S. importers on the goods they bring in from other countries to sell here. So let's bust some tariff myths. We'll start with a few of the simpler justifications the president offers for his tariff proposals and actions. Bryan, first, the president has said that tariffs can raise revenue to replace the income tax, or even to replace the income tax, and then almost immediately pivots in front of the next audience to tariffs are just negotiating leverage for something else. There's more than a little bit of cognitive dissonance involved in believing both of those things at the same time. Why is that, and what's wrong with each argument individually?
Well, a lot of these arguments are internally inconsistent, and they don't add up. Specifically with respect to replacing the income tax with tariffs, I think that a lot of people will hear that, and especially if you think that foreign people pay the tariffs, when in fact, as you pointed out, we pay the tariffs. It's just replacing one tax with another. But the numbers just don't add up. It's a fantasy. So we have about $2.5 trillion in income tax revenue coming into the government. We have about $3.5 trillion in imports coming in to the United States every year. So if you wanted to replace income tax revenue with tariff revenue, you'd have to have a tariff rate of approximately 75%. Well, you do that, what happens to imports? You lose all the imports, so you don't have the revenue coming in, and the numbers don't work out. Now, I will say, there are some people who might say, understand that, but say, well, we'd rather have a little higher tariff revenue and use that to knock off some other taxes and make some trade-offs, and those are discussions worth having. But one of the concerns, one of the many reasons I think tariffs are problematic is that they're one of the only I call them a double tax, where if we put a tariff on another country, they turn around and put a tariff on us, and we get going both ways. So I think we really want to be cautious and certainly get away from this idea that it's a free lunch, that, well, we cut our taxes and we can make foreigners pay for it. I wish that it was that easy, but that's not how things work.
Can I add something?
Sure.
I mean, I also will add that we've seen it, as you said. I mean, look, we saw who's been paying the tariffs the first time around, right? There's like a buttload of economic studies that actually show that the burden of the tariffs that we had the first time around were shouldered by Americans.
Right, yeah, this isn't theoretical. It happened.
Yeah,
We've looked at it.
Okay. The next two, we need to spend a little bit less time on, I think, just so we can hopefully have time for questions at the end, but we've got some bigger ones to get to. This one, I think, is fairly straightforward for an economist, but the president also consistently for many years has argued that we have to end our trade deficits. He claims further that running a trade deficit means we're subsidizing these other countries. Are trade deficit subsidies for other countries, are they something we should worry about? And why have we had such persistent trade deficits for so long?
This for me?
Yeah.
No. No, so, I mean, I'm sure you guys have heard this analogy done before. We all run tons of trade deficits with different people in our lives. My grocery store, right, it goes one direction. I give them money, they give me food. We do this. But also, again, by the way, again, it's not as if the trade deficit went down the first time around. In fact, it continued going down. You know what makes the deficit go down? A good recession. That makes the deficits go down. Are we better off? We're not. And the reason why, so the misunderstanding is one that is shared by actually a lot of people, including people who actually have no problem with trade. The reason why we trade is for the imports, right? We trade for the imports. That's the value, the real value of trade. And the reason why people want to sell us stuff is because they want our dollars. And all of these dollars come back to the US one way or another. So in a way, we win two ways with this trade deficit. We win by getting the stuff we want to get, that we usually get either at a better price or because it's like different quality. Like steel, for instance, a lot of what we import, the steel we import, we have tons of steel in the US, and in fact, the vast majority of the steel consumed in the US is US steel. But a lot of the steel we import are specialized steel. And so we get this, and in exchange, we get a lot of investment. We get also foreigners to buy our debt, but we get a lot of investment. So trade deficits, they're not inherently bad, and the stuff, and it's not to say, right, that with tariffs high enough, you couldn't in the short term reduce some of the trade deficits, but it wouldn't be for the good of the country. And by the way, if you want to actually kind of think about one of the profound inconsistency of the way the president and the people around him, because he's not alone, about this, is like, think about his rhetoric about trade with Canada, right? So trade with Canada is a problem now, but if they become the 51st state, all of a sudden, all of that problem goes away. Weird.
Real quick, I just want to, a trade deficit is not a deficit the way most normal people think of a deficit. It doesn't mean we owe somebody money. If I buy a new car that was made in Japan for $30,000, how much does America owe Japan because I bought the car? Nothing. No, it just means that we bought more from them than they bought from us. But if you add up all the investment flows, they all balance out. By the way, that includes hundreds of billions of dollars of investment in the stock market, in auto factories, in manufacturing jobs created by foreign investment. I think that's a good thing. We had about $600 billion in foreign dollars that came in buying U.S. Treasury securities. Now that debt maybe is not such a good thing, but if we have a problem with it, I think the answer is the federal government stop borrowing $2 trillion a year, not start slapping tariffs on everything left and right. And imagine what our interest rates would be if it had not been for that money coming in to invest in our economy. So one of the most confusing, but I think important things to keep in mind, I don't like deficits. Nobody likes deficits, but a trade deficit is not debt that we owe to other countries.
It's an unfortunate label that we can't unstick from.
It has also to do, a lot of all of this is to do because there's this myth that countries are trading with one another, but we're not. It's individuals that are trading with one another. And unfortunately, this kind of actually leads to a lot of thinking like in ways that are just counterproductive.
Yeah. I would add to something that Vero said about Canada and the 51st state, and earlier talking about some of the advantages that the United States has had over our long history, well, compared to Europe, a short history, but we are a 50-state trading bloc. We've had free trade. In fact, when the framers wrote the Constitution, they prohibited states from interfering with trade between the states. So the Constitution is partly a free trade agreement between 50 independent states. And it's been to our advantage. We have diverse economies in different parts of the country that all trade with each other, and we benefit from it. Let's keep this one really quick. More recent argument from the president, and another one that we've heard over and over again over the years, going back at least to President McKinley, is that tariffs have to be reciprocal for trade to be fair. Bryan, can you?
So unlike some people, I'm not really opposed to the idea of reciprocity. If you talk about reciprocity, you bring your barriers down, we bring our barriers down. So from 1989 to about 2009, foreign barriers on U.S. exports, foreign tariffs, fell by about 2/3. We had a variety of U.S.-Canada, NAFTA, World Trade Organization agreements, and these were win-win agreements that we were on track. If we had continued in that direction, we would have had reciprocal, low, almost zero tariffs with other countries. What happened after 2009? We stopped passing and negotiating free trade agreements with other countries, and that progress totally stopped. So I think win-win reciprocity is okay. Also, the idea today, if we had reciprocity with other countries, so we have a reciprocal free trade agreement with Canada and Mexico. That means we're not putting 25% tariffs on Canada and Mexico. That means we're not putting 25% tariffs on cars from other countries, because that means we're actually going to have to lower our tariffs on clothing. We're going to have to get rid of our protectionist barriers on shipping that are among the highest in the world. So the idea that we're the pure free traders and everybody else is taking advantage of it, it's just not that simple.
Okay. All right, these next two justifications are a little more complicated. The arguments are trickier, but we're also getting to tariffs and trade as more of a kitchen table issue. Vero, the president's nominee to head the Council of Economic Advisors this term, Stephen Miron, says that tariffs make us richer, or more fully, he says that there is an optimal tariff level, at least 20% and perhaps up to 50%, according to Miron, that won't raise prices here because foreign producers will absorb the cost to avoid losing their dominant customer, the United States. So we get the tariff revenue and foreigners bear the burden. Without getting too far into the weeds of economic theory, is there some truth to this? Does this argument hold water at all?
Hashtag Republican for tax increases. So no, so the thing is, like, again, tariffs are a tax that for the most part is shouldered by consumers in the U.S., right? And if they're, by the way, there's something I want to say because it's not said enough, right? When we say consumers, it's not just consumers of final goods. It's not just when you buy a toaster. Like you remember J.D. Vance was like harping about how, like we sold our soul just to buy a cheap toaster. Actually, more than half of what we import are inputs that are used in, manufacturing and that are also, used to produce stuff that are going to be sold here, but also used for exporting. So it's just, if you make things more expensive, and even if you think that what it does is actually prevent you and dissuade manufacturers from buying the stuff they wanted to buy and then turn to a domestic producer, it means they're losing something in the process since this is not the choice that they made in the first place. So this notion that somehow we're going to be winning is a problem, because when you impose tariffs, and by the way, it's another contradiction with this thing that somehow this is going to revive manufacturing, where actually so much of the beneficiary of imports are our manufacturers. So, it's like, it's inconsistent across the board. There's another thing that people don't understand is like a lot of the trade that takes place in the US are between related parties. So in the process, we're not just going to hurt manufacturers in the US, whether they're domestic or foreign companies, buy input to produce things in the US and then export them, but it's also, we're going to hurt it multiple times because a lot of what multinationals do is pass things across each other. So if you're saying that you want, let's say, more foreign car manufacturers producing in the US, you put a tariff and you make that harder to happen. Right? And so I just can't wrap my head, honestly, around someone who thinks that this is going to be a good thing.
This leads into the next question,
Okay.
which was for you. So, and Vero's already partly answered this. The classic protectionist argument is that imports are an economic threat, and we need to protect American jobs and American industry. We've been told that free trade has hollowed out the industrial base and the middle class, and we need to bring manufacturing jobs back to the U.S. This argument, I would add, wins votes. In communities all around the country, people hear that and think, yeah, that happened here. They or someone they know lost their job because the business couldn't compete with imports, particularly Chinese goods imports. Economist David Autor and others recently published findings through NBER of their study on the impact on communities and workers after China was admitted to the World Trade Organization just over 23 years ago. They found that in communities most impacted by Chinese competition, the communities overall did recover from the jobs they initially lost, adding new jobs to more than replace those lost. But that the new jobs in new industries in the area were largely filled by new residents, not the incumbent workers who had lost their jobs to import competition. Bryan, what would you say to this justification, protecting jobs in industry, and what is missing from that analysis?
So I think the boring answer, I just looked up this morning to make sure the numbers hadn't changed. Bureau of Economic Analysis website, anybody can take 30 seconds, pull out your phone and Google real U.S. manufacturing output. The last quarter was the highest it's ever been in U.S. history. Industrial production has gone up under free trade. Now, would it have gone up more or less if we had different arrangements? We can talk about this. But the starting point of our manufacturing base was wiped out because of trade. I don't understand it because our manufacturing continued to increase. And so when I'm talking in a more debate type of format, and some of you may have this question, they'll say, well, sure, output went up, but we have fewer manufacturing jobs. We have fewer manufacturing jobs because our manufacturing workers are more productive than ever. And if you look at what's happened to manufacturing unemployment rates, to manufacturing layoff rates, they've all gone down, and I don't know if any of you are in the manufacturing business or work at any manufacturing companies, but I bet you would come up to me afterwards and say, you know, the biggest problem we have, Bryan, is that we can't find enough workers to fill the job openings that we have. Not that there's a shortage of jobs.
I mean, if I can add, like, I mean, in manufacturing, there's over 600,000 job opening. So I mean, even if you assume that some of this, like let's say even half of this, right, is like companies trying to see who's out there, what kind of labor's out there. I mean, and we have a pretty low unemployment rate, and so, yeah.
My grandmother worked in a shoe factory in Missouri. It was a manufacturing job. Do we want those jobs back? Well, they're never coming back, and even if they did, they'd be done by robots anyway. So I think that's just not a path that we want to go down.
I would add, and Vero touched on this before, that the big thing that's missing from that analysis of that paper I cited is they're looking at individual communities and individual industry segments that were impacted by Chinese imports. Yeah, you face competition, you may not be able to compete. But what they leave out is all of the other industries where jobs are eliminated by protectionist measures. Like Vero touched on, you know, I think it's 60% or maybe even a little bit more of our imports are inputs to other manufacturing processes. And I've got 15 minutes, according to that. So anyway, let's move on. Let's move to what tariffs do to us as consumers and to the economy. This question is for either or both of you. What should we expect to see in the economy, in the economic statistics, from the administration's proposed tariffs, especially the broad, universal high tariffs?
So there are already attacks. We have attacks on imports coming from China. Maybe they're national security related. Maybe your Epiphone Gibson guitar threatens our national security somehow. I don't really understand it. But on the national security point, if you're concerned about China, I think there are reasons to be concerned. Why are we putting tariffs and threatening tariffs on Europe, Japan, Canada, you name it? So I think that the bottom line is these are tariffs that are affecting Americans, even the ones that haven't gone into effect because we have an uncertainty tax. Got to help you if you're trying to decide what to plant next month or how much fertilizer to buy or where to source your parts from. That's already going to drag down our economic growth, and it's going to have a harmful impact. And certainly members of Congress who have been pretty quiet so far about tariffs, once we start to see, if we were to see an uptick of inflation, if some of these tariffs took effect, I think we'd start to see a lot stronger pushback.
Yeah, I would say that, I mean, you talked about inflation. There's this big debate about the impact of tariffs on inflation. I mean, it doesn't have a direct impact, but it does have an impact in the sense that, prices of goods are going to go up. That's not inflation, unless it's like, inflation is a general increase in prices, including wages. So tariffs really, in effect, it's not inflationary. It doesn't mean that actually it doesn't have an impact on the fight against inflation or inflation, because eventually at the margin it reduces growth, which makes fighting inflation harder. And if the impact is big, it could actually really make things much harder. And considering that we're in an environment that is already prone and to actually, I mean, it's ticking back up, and in large part it's because interest payment on the debt has been really high. There's been no fiscal adjustment to actually try to help the Fed fight inflation. It was only a matter of time for inflation to go back up. If you put in policies that are going to make it harder it's just going to hurt, and in ways that are not the ones that we may talk about. Economists usually talk about when they talk about trade.
Okay, let me just throw out a couple numbers. The Yale Budget Lab ran the analysis on the two broad universal tariff proposals, 10% universal tariffs and 60% on China, or 20% and 60%. And in terms of what it does to prices, we're talking 1.5 to 2.5% increase in prices. So you're shifting, the consumer price index goes like this, and you're shifting it up, and then you're staying on whatever trajectory you would otherwise be on. But in dollar terms, what that means for a household, for your real disposable income, you're talking for the 10% universal tariffs alone with 60% on China, you're talking about $2,500 per household in lost purchasing power. And there are effects on real GDP as well. We only have a couple minutes left, so I'm going to go to one more open-ended question that I hear asked or argument made that there might be some circumstances out there where tariffs or other kinds of trade restrictions are necessary or useful. For example, there might be national security grounds, or there might be bad actors out there stealing our intellectual property, or some other grounds. Either one of you, are there any circumstances where barriers to imports to the U.S. Do have a valid use?
Yes, I'm the head of the Free Trade Initiative at National Taxpayers Union. Sure, there are some examples of where I think we should be cautious about not relying on adversaries for important goods. But the bottom line is politicians take advantage of these to come up with a variety of reasons to come up with barriers that have nothing to do with the examples that you just said. We put tariffs on China because of their intellectual property policies. Their intellectual properties never changed. We kept the tariffs. I grew up in Manhattan, Kansas, down the road from where Dwight Eisenhower is from. He talked about the need to have more trade, to have better relationships with our allies, to have a supply of the goods that we need in the event of a national security emergency. So more often than not, the arguments that, yeah, theoretically, sure, but often they're just excuses.
And it's worth noting, Adam Smith and all the free traders ever since have actually acknowledged that there is a national security and even geopolitical argument to limit free trade. That said, as Bryan has said, it's been abused repeatedly, but also we need to be honest with the American people that this has a cost. And often it may not actually be the best way to deal with the problem, because ultimately the reason why I never find it like a good, effective way to deal with these issues is like we're penalizing ourselves. So there may be times where it's worth doing, but they're very narrow.
On that very balanced note, nobody can say we're not objective.
Actually, a lot of people can say we're not objective.
Well, they will. That doesn't make them right. We are now out of time. Unfortunately, we got a little bit behind, so we don't have time for audience questions today. Not us. We didn't get behind.
Thank you. Thank you.
So thank you very much. And thank you, Vero and Bryan.